Hi, folks. It's late March 2022, and this is California and Nevada Credit Union League's Your Economy, Your Credit Union Economic Quick Update. We're going to go through some data real quick for you and try to catch you up on where things are going. This is the latest forecast as of February 2022 for gross domestic product. Growth looks pretty good over the next few years, though it's slowing down a little bit. The unemployment rate is getting down to about basically where we are at full employment, and inflation looks like it might turn a corner, but these data, the reason we're showing you this is because these forecasts are just from February 2022. So much has happened in February and March that it's hard to know how economists are going to keep up with these forecasts or whether or not they're going to change. But the shaded areas are the latest forecast, and the not shaded area to its left is last quarter's forecast. So a couple of things is A, we're probably going to see these forecasts change, but B, there's already been some fine tuning over the next few years in terms of the forecast with respect to what happened late in 2021 with Omicron and the lack of a fiscal package that was much larger coming through. We will see what evolves over the next few months. And the next time that we do this minute, it's going to be more focused on inflation and what's been going on there. But this catches you up a little bit on where the Federal Reserve sees the latest forecasts. In terms of where the Fed sees itself going with rates, one of the things that's come up in the news recently, especially with what's going on in Ukraine, is how aggressive the Federal Reserve should be. So this is the latest so-called dot graph, or the basic straw poll that the Federal Open Market Committee, or the committee that changes the interbank interest rates in the United States, sees the path over the next few years with respect to interest rates. You can see that there's some elevation off of the zero line, which is where we've been for the last couple of years, and then it kind of flattens out. But this is where they were in September 2021. So just over a 6-month period. The next couple of years, 2022 and 2023, look like aggressive changes. And then this uptick to basically the same place. So in September 2021, it was much more of a straight path from 2022 to 2024. Now it's much more quickly elevated. And this is why you're hearing a lot in the news about a much more accelerated change in interest rates. So we're watching the Fed closely, but right now it looks like there may be somewhere between 5 and 7 interest rate changes between now and the middle of 2023. A lot of that will depend on what happens in Ukraine, also with our own domestic policies with respect to more inflation pressure otherwise, but the Federal Reserve has become a lot more hawkish about raising rates over the last couple of months than they were the previous 6. In terms of jobs recovery, this is the evolution of the US since since December 2019. And you can see that we took a sharp cut, and then there's been this slow, steady move back up to where we were right before the pandemic hit, which is the 100 line. For California, we went down farther than the US on average and have come back up almost to about 96.5% of where we were before the pandemic hit. And then Nevada took a much steeper hit, but has recovered very nicely. So if you look at these two states with respect to where the US has been, the recovery's been very similar, but we still got some room to go in all 3 cases. We expect to have crossed that 100 line sometime in 2022. So watch for that as job recovery continues. And that helps our members, but there's still so much uncertainty out there. So you think about what's been going on globally and the effects on our members and our communities, even with what I showed you before, which is actually a really good forecast, generally speaking. The rates we know are going up, maybe a little bit more aggressively than we first figured, but we're still at relatively low historic rates. And then that jobs recovery looking pretty good, much better than we were thinking even a year and a half ago. They're going to be thinking twice about large purchases. So watch how members think about taking more loans, buying homes, buying cars, just simply because they just don't know what's going to happen. Will businesses hire more slowly? That's something to watch on the job recovery side. Will savings rates pick up? So there's been a lot of concerns about lingering high levels of deposits versus loans, and really it's sort of the reshaping of balance sheets. That might continue, especially if rates go up aggressively, and providing members with a larger incentive to save a little bit on the front end in terms of the short term, rather than thinking more in the medium term about purchases. For both these states, we're going to be watching housing building and sort of the migration patterns. New census data came out and suggested that California lost population in 2020 and kind of corroborated what the California Department of Finance had originally predicted. Whether or not Nevada gains from those losses and how these 2 states shift around will be a big question going forward in terms of population. The next time I see you, we'll be talking about inflation more specifically, but that's it for now. And so we look forward to discussing these issues and a lot more at this year's Your Economy, Your Credit Union Conference later this summer. You'll be hearing more about this from the leagues very soon. Thank you so much for your time, and I hope you have a great day.